Welcome to GTM's Tax Automation series on OneSource tax provision functionality. In this episode, we are going to talk about some special adjustments within the software, in particular, the deferred provision only adjustment and the currency translation adjustment that is outside of the system calculated currency translation adjustment. So if we take a look at this slide deck, the deferred provision only adjustment is not one that a lot of people know about, that particular functionality within the software. It allows you to book a deferred expense or benefit entry with no balance sheet offset. And typically we will see this as implementers when we are first setting up an instance of the software and we are doing a recreation of your provision and we need to tie the deferred expense out, but also need to tie the deferred roll forward out to what you have on the GL. So sometimes there is a need to put in this P&L only entry. So it's a setting that must be activated within the administration area in order for the screen to be seen within the unit detail functionality. So if we just step into the software, we're going to go into the administration area and it will be in the systems manage configurations area. It's located under admin and under other, you will see the option. And typically the default is that it's not been enabled, it's disabled, so you may have to come in and enable it. Once you have done that, you will need to go to your particular unit that you want to enter the adjustment for and put in an entry. So I'm going to my unit 100. This will be located under rates. And you can see here that I have a $25,000 adjustment. Now, one of the problems with this, and I'm going to pop into an Excel file here, is that when you use it, the entry shows up on your tax provision, but it causes what I call the deferred roll forward to break because the expense no longer shows up on the deferred roll forward. So as you can see, the total deferred provision here is $1,379,709. Whereas if I go to the tax provision report, the sum of my two state and federal entries is $1,354,000. So there's a difference of $25,000. And typically, one of the benefits of OneSource tax provision is that you can kind of trace your activity from report to report. So I personally like to see my deferred provision expense that's located here on my provision tie to my deferred roll forward, and I also want to see it tied to my ETR report too. And it does show up on the ETR report here. So what's a better way to do this? If we use the unit after tax temporary difference tab and set this up, this is a better way of doing it because it will allow you to trace your data through the software. So I already have this prepped to load. I'm going to go back in and I'm just going to zero this out. We'll come out here. And then I am just going to go right into my review and edit screen. And I'm going to go to my after tax temp diffs and I'm going to load this file that I have here. And once I've done that, we are going to see that my result is going to show me that my post-change deferred tax expense will tie to my provision report. So if I go in here, I'm going to run my provision report. Oops, I forgot to change my unit. So I'll run my tax provision report. Now, if I scroll all the way down, you will see that my DPOA is gone because I took it out. All right, but I still have my 527,735 that I showed here. And now when I go in and run my deferred balances report, you'll be able to see that my P&L will tie to the 1,354,000. There we go. So this allows you to maintain your audit trail. You can see exactly what is happening. And what I did with the entry is I put a deferred only entry in, and then I offset it with a balance sheet only entry. So I'm getting to my same place where I don't want to impact the deferred balance sheet, and I want to reflect a P&L entry. But now when I look at all my various reports, my reports tie, I will show the same deferred provision entry on my deferred as I will show on my tax provision. And I will also show that same number rolling through my ETR report as well. So the second thing I wanted to show you is the currency translation adjustment. And this is an additional adjustment on top of the system calculated CTA. So the system calculated CTA just provides a balance sheet only entry, and it does so on the deferred side and also one that runs through your payable. And as you know, the CTA adjustments only show up on the reporting currency reports. Now, to get the additional CTA entry, we have to go into the system once more, into administration, to activate that screen, because typically it's not something that shows up out the box on the unit detail screen. So it will be in your advanced functionality. There's a tab called currency translation adjustment, and you simply turn your toggle switch to on. Once you've done that, you'll be able to come back over into your unit, and you're going to go to Other this time. Select the Miscellaneous tab, and as you can see here, I have a couple of additional entries in here. So typically, if you're trying to enter an entry to the deferreds or to the balance sheet only, say you don't like what's been calculated, you can come in here and put a balance sheet only adjustment. And I think the key thing to point out here is that all of these entries are impacting the deferred balance sheet. There is not an option for you to put something in the payables like that. But what if you needed to impact your current side and possibly, for whatever reason, maybe you need to reflect a P&L entry? So what I'm showing here is that I put an entry into the activity, and I put an offsetting entry to deferred only. So I am getting rid of the deferred P&L expense, because remember, the activity will book a current deferred flip. And I am, in essence, not changing my ending balance for the CTA. So if I come in here and take a look at my deferred roll, you'll see I put that in, and I'm showing the activity there with an offset, and I have zero impact on my deferreds because I just kind of want to impact my current side. So when I run the tax provision report, the CTA is going to show up in my after-tax temp differences area. And there's my $25,000, which, as you can see, goes into the return basis provision. So I'm also impacting the receivable payable for that $25,000. But I'm also impacting expense here as well on the ETR, because it is showing up on the ETR report also. I hope you found this session helpful and look forward to seeing you on the next.